Hey Team 101, in this video we will be analyzing and forecasting the market for gold and crude oil from 11 till 12 June. Here we can draw a channel from some around here, which would be some around here. Here we have seen a bullish move in the gold due to the fundamentals which we have recently experienced due to the Fed supporting the economy with unlimited cash printing or the money printing, which devalue the US currency and increases the demand for the safe haven. Let me draw that in a zone. Here on Friday, as told in our forecast, we have seen a bounce towards here, in which I have told my team to take and buy within some around in range of 1678 till 1673 within a stop loss thus placed below the 1661. So here we can see that the market for the gold is currently testing an critical resistance here. At this resistance around 4 to 5 times we have seen the market bouncing off. Let me draw that. Here we can see that the market has bounces off this critical area. Here in this area we have seen the market for the gold has bounces off here once again, one more time here and once more here. So this in total became 5 times where we have seen the gold bouncing off or facing resistance after crossing in order to cross this resistance, and which make this resistance zone and major resistance. Here we can see that currently the market is trying to break this resistance or this major resistance. Here also we can see an ascending channel being formed, ascending triangle being formed. This is the resistance zone for the triangle and this is the support, as we have seen that the market has taken the support some around here, here also. Thus what a trader should do is that we should see any fundamental news or coming on a smaller time frame on a 4-hourly chart. Here we can see an ascending triangle, a symmetrical triangle being formed. Let me draw that in a zone from here till here. We can see that the market from Friday is continuously taking the support of this support trend line, and recently we have seen a breakout from the symmetrical triangle. Let me show that. Here we have seen a breakout from a symmetrical triangle. Thus what a trader should do for Thursday and Friday from 11 till 12 June is that we are bullish for the gold and a long position can be created some around here within take profit some around here. The take profit would be just placed below the recent highs and the stop loss would be just placed some around here. However, what I expect for the gold market to do is that we can see a bounce off towards the support before continuing its rally upwards, as recently we have seen data on PPI and initial job loss claim which were positive, which means they were negative for the gold, and the gold should fall. However, we have seen a bullish move. Thus what I am expecting or what would be a great trade opportunity for the gold would be going buy from around or on that test towards this support trend line which I have drawn. Thus this trade will give a greater reward and less risk from here till here. This trade will give an risk reward of 1:3. However, we see that the market isn't testing the support trend line, and we have seen a continuous bullish move. Thus we can take a long position on a pullback towards the resistance zone, turning into a support with a take profit some around 1762 and with a stop loss just placed below the support trend line. This trade will give an risk to reward of 1:1.5. So we are bullish on the gold for 11th till 12th June. Now proceeding on crude oil. So now proceeding on the crude oil, here we have seen that the crude oil has recently tested this resistance zone which I have drawn in my previous video, and what I have told my viewers that if we see a break through this support trend line, a sale position can be created. However, I was expecting a bullish move due to the fundamentals present at that time. However, the fundamentals changed and we have seen a break through this. Now we have seen a huge sale off in the crude oil from some around 39 till now present time trading around 36. Now what a trader should do is that we are currently bullish for the crude oil. Let me draw that more clearly from some around here till here. Here I have drawn the support trend line and then support zone, and we have here seen a break through this. Thus we are bullish due to the technical perspective. However, going on in a smaller time frame of an 4-hourly chart, let me draw that. Here we can see a M pattern being formed. Let me show that from here till here, then from here till here, and here, then testing the recent highs. Then again we have seen a lower move. Thus what I am expecting for the crude oil is to test this area, of which is our first take profit of an sale position would be some around 34. First take profit would be in an area of 34, then the second take profit would be in an area of 32, and the final or the third take profit would be in an area of 31, due to the fundamentals also supporting my analysis of being bearish on the crude oil, which I will explain in the video later. Let me draw the resistance support trend line also from here till here. Thus what a trader should do for the crude oil from 11 till 12 June is that we are bearish for the crude oil, and a long position can be created on a test of this 50 MA with a stop loss just placed above the resistance trend line some around here. Our first take profit would be some around 35. Then our second take profit would be some around 34. Then our third take profit would be some around 32, which would be our final take profit. This trade will give an risk reward of 1:3. Then our second TP would give an risk to reward of 1:2, and our first take profit will give an risk reward of 1:1. So now coming on the fundamentals, why I am bearish for the crude oil is due to that we have seen crude oil prices slump at the fear of virus second wave waits, which means we in countries which have fully recovered or has been in a process of recovering from the COVID-19 virus have experienced a second wave in the crude oil, which has reduces the demand, and the countries are forced to lock down their people, which means that the production or the industry which uses the crude oil are closed, and which means or which indicates us that the demand of the crude oil fell, due to which we have seen a significant sale off with an 4-hourly candle, which is from some around 38 till around 35. and moreover the oil prices crashes due to the second wave of the COVID-19. Thus, according to me, an ideal position for taking a short position for the crude oil would be at a test of this resistance trend line. Let me draw that, which would be also the test of the 15 mm. Moreover, we have seen an hidden bearish divergence on the crude oil on a 1 hourly chart, which also suggests that we should take and sell position on the crude oil. Thus, and in summary, what a trader should do for gold, we are bullish on the gold and the take profit and the stop loss are shown. However, we are bearish on the crude oil due to the reduction in the production leading to the reduction in the demand. Thus, we are bearish and we can see a bearish move in the crude oil. However, any vaccine invention or a improvement in the process of making vaccine can change the whole scenario of me being bullish on the gold and being bearish on the crude oil. If you do like my analysis, do like, share and comment below and do consider subscribing. Thanks for watching.